Hi, I'm Jeffrey Roach, Chief Economist for LPL Financial, and in this edition, I will highlight three real market impacts from the new leadership at the Federal Reserve. First, productivity-led growth is disinflationary. So this topic is connected to the fourth task force highlighted here in the chart. The fact that Mark Andreessen and Charles Jones are leading the task force on productivity tells us that Warsh is committed to the view that the inflation battle will be partly won with the help of artificial intelligence, making the labor force more productive. And looking at the other committees, we should expect some quality recommendations from these seasoned leaders. For example, Rajaram Rajan will bring a unique perspective on structural risks, as he detailed a while back in his seminal book, Fault Lines, which won the Financial Times Business Book of the Year. Second, strong leadership squelched the so-called debasement trade. So before Kevin Warsh took the helm at the Federal Reserve, many investors worried that large fiscal deficits, easy monetary policy, and politically influenced Fed officials could erode the attractiveness of the US dollar. Those concerns helped fuel the so-called debasement trade, a theme that favored gold and other hard assets, while casting a bearish outlook on fiat currencies like the US dollar. Since Warsh's appointment, however, that narrative has begun to fade. Gold and other precious metals have pulled back from their highs, while the US dollar has remained relatively strong. Warsh appears determined to avoid repeating the mistakes that allowed inflation to remain just too high for too long, creating the affordability challenges that many households continue to grapple with even today. His leadership is focused on restoring credibility, reinforcing price stability, and supporting confidence in the US dollar. Third, the US dollar strengthened since the start of the year. The US dollar has shown impressive staying power with the ticker DXY holding above 100, even as investors continue to debate the long-term implications of large fiscal deficits. A big part of the story is that the US economy continues to outperform many of its developed market peers. Growth has remained relatively strong, the labor market has held up well, and business investment has been supported by ongoing spending in areas such as technology and AI. At the same time, the Fed has maintained a relatively hawkish stance, helping keep U.S. interest rates attractive for global investors. Add in periodic bouts of geopolitical and economic uncertainty, and the dollar continues to benefit from its traditional safe haven status. In other words, as long as the U.S. economy remains resilient, the Fed stays focused on inflation, and investors seek safety during periods of uncertainty, the dollar should continue to find support. Well, that's all for now. If you want more insights, follow us on social media, and take care.